Hey, what's up, my friend? So today we have Darek Dargo in the house, baby. So Darek is a full-time Forex trader and he has been profitable every single year for the last 7 years. And do you know what's even crazier? I've seen his track record. He has taken close to 1,000 trades. And can you guess his winning rate? He has an average winning rate of 86%. Yeah? So clearly, right now, this is a man, right, that you want to learn and hear from, especially if you trade the Forex market. So in today's episode, right, here's what you'll learn. We'll first talk about how Darek got started, right, in trading and why he chose to specialize in the Forex markets. Then we talk about his proprietary price action plus MACD trading strategy, right? This is his core trading strategy, which he used to trade the Forex markets. We dig into his specific entries, stop loss, targets, and much more. Then he also share his trading strategy called the OPOS, right? Trading system. This is very suitable for those of you, especially if you have a full-time job, because it doesn't require you to, stare at the screen all day. Then we also talk about the difference between supply and demand and support and resistance. Plus, we also talk about how Darek handles news events in the Forex market, and it's, not what you think. So all this and more in today's episode. You ready? Let's go. Okay, so welcome, Dargo, to the show. Happy to have you today.
Hello. Nice to see you, Ryan. I'm also happy to have this, let's call it a podcast or a meeting or an interview, however we call it. It's always,
Sure.
I'm happy that I have an opportunity to speak with someone who lives 15,000 kilometers from me.
That's pretty far, right? And one thing that I want to say is that, we haven't known each other for a long time, but having, interact with you, see your postings, I really admire your trading approach where you combine both, price action and indicators. Because often, people fall in kind of like one of two camps. Either I'm a price action all the way 100% naked trading, or I'm going to go down with the indicators. But you kind of, have a blend of both. And I see that it really worked out for you. And I understand, I like the thought process, right, behind your trading, which of course we'll dive in more later. But that's just kind of like, my appreciation, right, to your trading methodology, right, that has, clearly worked out very well for you. So to kick things off, right, Dargo, curious, right, if I were to ask you for one word to describe your growing up years, what would that one word be?
Oh, I must say, when I started, you mean the whole life or you mean the trading only period?
I would say more towards growing up years, so maybe could be anywhere from, when you're 5 years old as a kid to about 17, 18 years old, 20 years old, that growing up years. So it's more of your personal life, yeah.
Okay, so I am a person who likes competitions. I like to compete with everything, with anything. So I like to compete with my friends in the school to be better. I like to compete when I started training sports. I like to compete also when I'm a trader, because when I'm trading, I have one competitor, it's market and me, and that's what I love in trading. That there's nobody around me. It's me and the market. Nobody will tell me what I should do. I'm just using my education, my knowledge. So I like competitions. I like competitions, and even time is running, and I'm the same as I was 10 years old. I always would like to be the winner.
So perhaps could you share with me maybe a time, right, where you competed, right, and where you perhaps the outcome wasn't what you're looking for? Maybe is there any stories that you can share?
Well, competing for me, competing means getting yourself better. Because if you don't have to compete with somebody. You never know what's the level you reached. You only can test your level if you compare yourself with someone. My first years I spent on Sri Lanka. I was living on Sri Lanka over 6 years when I was a boy. was there with my family. My father was working in an embassy, a Polish embassy, and I was just as a child. I lived in Sri Lanka in Colombo, and my father took me to a swimming pool, just saying me this is a huge opportunity to learn swimming, because in our country it was really, we had not a good climate. We couldn't swim outdoors more than 2 months a year, and the swimming pools, there are few of them, in those years. And when I was walking by the pool, I slipped and I fall inside, and there was nobody around me. And it was the moment. This was the way I started learning swimming, because I had to survive. So I fought with all my strength, and I said that when I catch the bank, I said, "Wow, it was a bit frightening, but maybe it's not so bad." And after 3 months, I started competing in swimming contests in Sri Lanka, and I got the championships of Sri Lanka in diving and swimming on 100 yards pools, because there were yard pools there. And that's how I started feeling that competing makes me stronger. And
That's crazy. That's so it's like, you accidentally fell into the pool, and where most people, if there's no one around, they could have drowned, but you found yourself to the bank. From there you started having a passion for swimming, doing it competitively,
yes,
and within 2 months you won like a championship.
yeah, it was a lunch break, so nobody was on the swimming pool. People were sitting in the shadow, drinking some beer, eating lunch. And because this was a club, it was called OPOS Aquatic Swimming Club in Sri Lanka. It was a club for people who just like to spend free time there. And it was also a restaurant, tennis, and everything around. So the pool was just a part of this huge complex. So I was really alone. I was alone in the swimming pool that time.
Because for most people, if they fell into the pool and they have no experience on swimming, right, there'll be fear, right? Was there any fear in your mind when you're in the pool at that point in time?
Yeah, of course. I just don't remember so clearly that. But when you compare this moment with a moment when you start training and you fail, it's nearly the same. You just need to stand up and try again. That's the way that's my approach to life and training.
But in swimming, right, if you fall and you don't have the skill, right, you might drown, and it's a lot more serious than just blowing up a few accounts trading.
Okay, yeah, but the stress is nearly the same. This wasn't a deep swimming pool. I fall where it was not so deep. It was about maybe 1.5 meters. I was a bit, maybe so much below the water. If I would fall on the deep water, because there was also the second part of the pool was very deep, because there's a jumping tower, then it would be worse, probably. Maybe we wouldn't speak today.
I see. And how old were you when you fell into the pool?
I
How old
was
was that?
8 years. 8 years old.
8 years old. Okay. And you said that your father worked in the embassy, and that's why you're there in Sri Lanka for 6 years thereabout, right? You mentioned that.
Yeah.
Then you got into competitive swimming. So, okay, since competitive swimming and trading are all very competitive endeavors, so where do you think the similarities lie between competitive swimming and trading?
Well, the first thing is that what I said at the beginning, we compete with someone, either some other swimmers, or either we compete with the market. We know that traders like to boast about their results. If you check the internet, you only see good results. You never see those people who lose. So someone who hasn't the idea of trading will say, well, it's a perfect business. Everyone is winning. And when I compare now the swimming and trading, and I know many people who are losing, I say it's the same like on a contest. There's only one winner, and most are losers. And the same is in trading. I believe that maybe 20, maybe 30% are winners and the others are losers. But it doesn't mean that if you lost today, it doesn't mean that you can win tomorrow. This is the same. When I started swimming, I was 7th, 8th in the contest. Then I was 5th. Then I was 3rd, and then I was 1st. So everything means that you need to practice, and practice. Because especially swimming is such a kind of sport that you cannot achieve good results if you are not training. I always compare football with swimming. In football, you can accidentally kick a ball and it will fall and make a goal. Yeah, it can happen accidentally. You have no accidentally results in swimming. If you are not well trained, you cannot change your results, or let's say 5 seconds in 100 meters day to day. It's impossible. And
Yes.
that's why swimming is one of those sports where you really need to work hard. I was training twice a day for about 10 years, even on
Wow.
Saturdays, 6 days per week, twice a day, early in the morning at 6 o'clock before going to school. And then when I came back from school, I was just passing by the swimming pool and was going training. And then I came home at 6 o'clock afternoon. So, and what it gave me really a huge, I would say, I respond to the problems in a very easy way. Problems is just one of the things which I need to solve. It's not something which is, beating me down. It's not making me sad or hysteric. Because I feel that an obstacle is something which you need to fight with. Is it life? Is it sports? Or is it trading? This is very important to be. You need to be hard. We say that you must have. You must be hard like a stone to all the things which try to spoil your humor, your bias in the life. So generally, sports gives a lot. Sports gives a lot because I learned to be hard, and I've said I learned to be tough. Not soft. That's it.
I love it. And I'm curious, because when you mentioned you train twice a day for swimming, I believe you're actually competing at a pretty darn high level. So what kind of level are we looking at as competitive swimming?
Well, when I was young, my best results it was the finals in the national championships. I never got a gold medal when I was a youngster. I came back to swimming in 2005 as a master swimming. Master swimming, those are older people still taking part in contests, and so now it's over 18 years back. I'm still training, not so like I did it when I was young. Now I'm training 3 times a week only. So I'm doing, let's say per year, I'm swimming about 300 kilometers only. So it's not a big attempt, but the age is also, you need to remember about your age. You cannot do too much because you spoil your health. But the best results I got as a master's, because I have about 20 national records at the moment, and I'm not able even to count how many gold medals I got in my different age groups, because I started training.
Yeah.
I came back to swimming when I was about 40, and from that time on, I lose very, very rarely, I would say. I was taking part
Okay.
in World Master Championships in Göteborg. I was taking part 2 times in European Championships. It was in Cadiz. It was in Slovenia also. I like to travel and swim also. That's it's an opportunity to meet really nice people. I know people from all over the world. When I was on the championships in Göteborg in Sweden, there were 7,000 people taking part in these championships, and there were people from the
Wow.
whole world. I met then people who I remember that I really there were idols for me when I was young. Those were people who were world championships in swimming that time when I was, let's say, 18. They got gold medals on the Olympic Games, and then I competed with them when I was 40. It was really something wonderful, and it's really perfect. In Göteborg, there was a swimming pool with a huge green grass, a huge field, because it was an open swimming pool, and there was a kind of a picnic there, where few thousand people were from the whole over the world were just speaking, exchanging, the t-shirts and the swimming caps. I have one from Brazil, from a swimmer who was the world championship on the Olympic Games. For me, it's a kind of a really nice item I have. It's a kind of a let's say it's a history of swimming of that man. That man is a history of swimming. So that's something which you must find a balance between work and entertainment. You cannot work only, because if you work too long, the effects are even worse than if you work just the optimum time. The same as with trading. I try to trade not more than 5 hours per day, because if you stay before the computer too long, you gaze at the charts. After people, a man's brain is not perfect. It's always when it gets tired, then also the results are getting really not really bad. So I hate over trading. I remember when I started trading 15 years ago. No, I started trading in 1990s. Probably most of our viewers were still not on this world.
Still in school, maybe not even born.
Yes. I started in 1990s. No, in 1990s, big changes were taking place in my country. We became independent from the Soviet Union, which was really keeping us in very strong relations, and we weren't able to do what we wanted. In the 1990s, the changes came, and then also the stock market was reactivated. And I started to learn the principles of the capital market, the mechanisms, how to govern the market, what is the demand, what is supply, what does the capitalization of company mean, and those things. This is something new for me. And in 1990s, the Warsaw Stock Exchange was established, or not established, it was, let's say, reactivated. And I remember my first buy, I bought 100 shares of a company, Polish company, Elektrim. It was a company which was building the highways. So it was a construction company. And believe me, that those 100 shares I'd sold 2 years ago. I kept those shares for over 20 years. It was 1991 when I started buying stocks. Yeah, 1991, and I sold them in 2021, so it was 30 years.
Why did you sell?
Because the company was not existing at all anymore, and it was divided to small companies or other companies, and then someone started buying those shares because they were not already on the stock. This was outside the stock. And I got an offer by mail that I own 100 shares of this company, and they are gonna. I had two choices. I can sell them or I can lose everything because they will be, eliminated. And I got some money for this. Not big money, but still, compared to what I invested, it was still about 500% more than I invested. Compared in dollars, when I counted, it changed this values in dollars. So, but those were funny times when the stock exchange, there were quotations twice a week only, Tuesdays and Thursdays. And there was a limit that a stock cannot go up more than 10% per day and cannot fall more than 10% a day. So it was, it was like a casino, buy or sell. It was nothing really to do with real market. But then one day came a Black Thursday, and there was a crash, and the stock started falling like crazy. And luckily, I took out the money I invested. I was not in a big minus, but I know that many people lost everything, and there were problems. Some suicides and so on. It was a Black Friday in Poland, Black Thursday, sorry. And then I came back to trading after some years. But why? How it started? And maybe I don't know if it's interesting, but how I started. Many people, when I ask how you started trading, I saw it in TV. I saw it in the internet. Someone called me that there's an opportunity, and I started thinking about trading. The way I started was absolutely different. I started from real money. Real exchange market, the interbank exchange, because I was running for several years foreign trading company. I was buying and selling, I was importing goods from China, and selling it in Germany. I was buying Polish products and selling them in England or in Italy. I guess it was just a typical trading company. So when I was buying and selling goods from different countries for different currencies, I had to exchange those currencies. No, when I wanted to buy something in China, I need dollars, okay? And I sold the goods for German Marker, German Deutsche Mark. So I had to change the Deutsche Mark to dollars. And then I noticed that if I waited a few days, I sometimes get a better exchange rate than I would have on Monday, let's say. I wanted to exchange, let's say, 100,000 Deutsche Mark on Monday, but I said, oh, I'll wait until Wednesday. Oh, on Wednesday I got a few dollars more, and I noticed that I could make money or lose on the currency conversions exchange rate. And I started following the charts because before I just had the info from my bank how much I will get for let's say British pound. Oh, so much dollars. Okay, thank you. I'll wait. And then I got to the charts. And I started watching the charts, and I said, there's some kind of system that I can foresee that the market will go higher or lower. And that's how I started gaining money exchanging the currencies. But those were real market. It's not contracts for different. Those were not futures. Those were real money to real money. Now, this is one-to-one without the leverage at that time. And that's how I started watching the charts. And then when I closed the company, I started trading, and from that on time, I'm on the trading. I don't have any other activity at the moment.
So how long have you been doing Forex trading since, you mentioned you sold the company?
2008, something about 2008, I started my first contact with charts. Of course, I was always looking at the charts of stocks. That's because I had it in my blood that stocks were always interesting, but I didn't invest much money. It was just a hobby. But when I started looking at the currency exchange rate, it was 2008, 2009, something like this. And I found that contracts for difference are so easy to trade. They are so easy compared to the stock market. I said, wow, with stock market, I can only buy. I can trade only one direction. I can buy and hope that I'll sell it in better price. But on contracts for difference, I can trade both ways. I said, wow, it's El Dorado for me. I can do, I can sit 2 hours before the computer and I can buy, sell, and be rich in few hours. Of course, the reality was a bit different. I remember burning my first account. It was really crazy. I opened an account, a real account, and I invested not a huge account. It was about $5,000, and I made from $5,000 $15,000 in 20 days. I said, "Wow, this is this.
Wow.
Now I mustn't work anything anymore. I'll just trade, and I'll be so rich that I won't know what to do with the money probably." At that time, I started swimming also, so I left an open trade on dollar with yen with a big volume because I was trading really like crazy. It was 10% up, 10% down, and I went to the swimming pool, and when I came back, I found that there's $10 on the account. I said, "What is this?" First thing I thought it was a scam, that someone cheated me. I called the broker. What happened? And the broker said, "Well, check your account and see what happened." And then I found out that there's something like which we call payrolls. It was the payrolls day, and the payrolls were very positive for dollar, and I was shorting dollar with yen, so I lost all my account on one trade only. And I remember that from that time I said, okay. So the fundamentals also have some influence, not only those lines on the charts. And then I started following the fundamentals also. And now I combine a bit fundamentals, a bit technical analysis. I think that technical analysis is still, let's say, 70% of the reason that I open a trade. But there are a few events which we need to watch. Payrolls, central bank decisions regarding the monetary policy. Lately, also the CPI reports, the inflation rate report.
Yes,
because
inflation.
Yeah, you remember the time when inflation was about 2% and it was not changing nearly, and this was not an important news. But nowadays, sometimes the inflation reports are even more important than the central bank decisions. So those three things, I think we need to take. We cannot get crazy and watch every event because it's nonsense. Most of the events have temporary impact, maybe a few hours, and things go back to normality. But payrolls, CPI reports, and central bank decisions, especially when we expect some interest rate changes, those things we need to watch.
So why did you choose to like focus more on the Forex trading? Maybe instead of you could have do things like stock markets or even CFDs. So why Forex trading?
Well, I think that the volatility is really interesting on the currency exchange. The currency exchange rates are moving. There are some special pairs which I really love to trade. I like to trade pound with Japanese yen. It's a pair which is giving huge opportunities. It's a trending market, so the trends last for a few days at least. I'm a swing trader. Let's say the generally I'm a swing trader and a scalper. I'm not a position trader. I rather prefer scalping and swing trading. But generally, from stocks, I like to trade indices. S&P 500, German 40. Those are the indices I trade also. I don't trade exotics because exotics there are huge costs. The provisions the brokers take are huge on the exotics. The spread is huge, and also the probability that the market will change in seconds is also huge because those markets like to be, let's say, speculated. The markets are not always behaving like they should, or let's say this way. And there are two currencies which are also manipulated. It's yen and it's Swiss franc. We know that the central banks has a huge impact on this, what's happening. Bank of Japan is a special type of manipulator, I would say. That's why things which are happening on Japanese yen, we cannot understand them. We just need to feel them only. The only country in the world which has negative interest rate is Japan. Yeah. And still they have, and the inflation they have at the same level as the United States. So when we look at the dollar with yen, from the fundamental point of view, there's no reason that yen could get stronger. You get 5.5% for your savings in a bank, in the US bank, if you keep it in dollar. And if you keep your savings in yen, you get minus 0.1. So why should I keep yen? Huh? So the fundamentals also help us to understand the market. The fundamentals are also important.
Right. So you've been trading Forex full time for the last, was it 3 to 7 years? How many years has it been?
It's about, I think it's about 15 years now. 15 years.
15 years. Since 2008, you've been trading
Forex
something like this. Full time actively.
Yeah.
Nice. Okay.
Mainly contract for difference.
But for now, it's still contract for difference, or is it more of trading Forex in the OTC markets with the brokers?
Yes, something like this also. I have few accounts. I have accounts also a futures account. So I cannot say that I'm only on one direction. But at the moment, I must say that the contracts for difference for me are perfect for trading.
Okay, got it. I think because in different countries, they call it differently. Some call it contract for difference, some call it spot Forex, some has forwards, futures. There are many ways to trade the currency market, not just, on certain OTC markets. So I think different countries have different ways or different accessibilities for their retail traders to access it.
Over the counter, it's nearly the same like contracts for difference for me. It's nearly the same.
Right. And maybe let's kind of maybe touch a little bit more on your trading approach, right? So I know you specialize in the Forex market. So maybe a high level overview, maybe you can share with the listeners, the audience, how do you trade the Forex markets? All right, we can talk about the high level overview first, and then maybe later on dive deeper into the specific strategies that you trade.
Well, how I trade Forex market. First thing is that I always say that it's no matter how you trade, what kind of strategy you use, it's very important to stick to the rules. So if you have a strategy and you test it for 5-6 times only, this gives you absolutely no idea, is it a profitable strategy or not? If you are able to backtest a strategy, it's even better, but not all strategies are possible to be backtested for many reasons. But I use for some time also expert advisors, but I must say that I don't know how to program them. I only gave some instructions to my friend, and he wrote this. He wrote the code and everything, and I found it a bit problematic for me to give my ideas to someone. He will turn it into mathematics and so on. So I quit expert advisors. So now I'm trading manually, and I must say that the most important thing for me is not what I'm trading, but how I'm trading, because each instrument is good for trading, but you need to find a special approach to it. You cannot trade in the same way a currency like pound with yen, which is very dynamic, compared to euro pound, which is flat. This is in consolidation mainly. So you need to first thing you need to do is describe the market. Is it a consolidated market with some range, or is it something very volatile? Then you need to use this specific strategy for that instrument. Of course, it also depends on the strategy must suit your character and your lifestyle. If you are a full-time trader, no problem, you can try different strategies. But if you are working, and I believe most of our viewers, our friends, they are working and trading. So they must have such a strategy which will fit their lifestyle. If he comes back from work and has only 3-4 hours per day for trading, he must have another strategy than someone who can sit before the computer from early morning to late evening. That's why I always say that for people who work and don't have much time, they want to like to trade and use it as a hobby, they could use a strategy which is based on pending orders. So I have a strategy which is called OPOS. It's a strategy based on pending orders, where you have supply demand zones and you plan a trade in front. So even if you're at work, the broker will open the trade if it's a pending order, if market hits that level. I'm a full-time trader, so I use mainly a strategy which is based on manual opening. I open the trades manually. I have a strategy with very objective assumptions. What I mean objective, it's my strategy is based on 3 questions, and those are questions where I call them 0-1. You can only answer yes or no. You cannot hesitate to answer if the assumption is matched or not. If I say that the part of the strategy is based on breakouts, and if I ask myself, was the breakout done or not, I already see on the charts, yes, because the market is close below or over the level, or not if it didn't do it. So very simple question. The worst strategies, in my opinion, are those where you hesitate. Maybe yes, maybe no, I don't know. I must think it over. The best test is if you have 10 people before you, and you ask them a question. If 10 of those people can answer the same, it means that this is an objective question. If I ask someone, is it outside, is it day or night? Of course, everyone say, yes, it's a day because sun is shining, and no problem. But if you ask someone about the weather in China at the moment, someone will say, oh, I don't know, I must check it, and maybe it's sunny or maybe it's winter. This is the problem. The assumptions of the strategy must be very simple. My strategies are very simple. Price action, and as you mentioned at the beginning of the session, I'm using MACD. It's an indicator. I sometimes feel shy saying that I'm using indicator because I know that markets believe that naked trading, I mean not we naked, but the charts are naked. It's of course the best way of trading. Indicators are disturbing, distracting us, and so on. I thought so also at the beginning when I started trading. I only tried to use no indicators. Then I started testing hundreds of indicators. I remember a chart when I had about 12 indicators at once on it. And then I found out that no, it's not the way. And I started eliminating all the indicators. And the only indicator that survived is MACD. But I'm using MACD in a special way. I'm not using it as most people show, that there's a signal line and so on. No, I'm just looking at the changes of the direction. But it's not all. The MACD is only indicator which is filtering the setups. It means that it's not deciding about entering. The decision that I enter a trade is based on 3 steps. First, I need a pattern, like an inside bar, outside bar, pin bar. Then I need a breakout from that pattern, and then comes the MACD as a filter. If MACD is not showing any changes, it's still in the same mode, let's say bullish, and I want to short, then the MACD says, no shorting, wait. That's how I'm using MACD. The MACD is not the only decision, It's not the reason that I open a trade. I need some more signals from the market to open a trade. And what's important is keeping up to the rules. Even if things doesn't work 10 times, it doesn't mean that it will not work. You must test it 100 or 200 or 300 times before you can say, yes, you have an edge or not.
And what if, let's say, you test a trading strategy 300 times and then it lost money? So what's your next step?
Well, if I see that from 300 trades, over 50% were losing, it's time to change the assumptions of the strategy or just quit it and search for another. Normally, the main strategy I'm using, it's very easy to test it. So if you want to test it, you just sit down during the weekend when you have more time, and you just search for the patterns I use. My favorite patterns are engulfing patterns, 2 candlestick patterns, and you can check all the engulfing patterns on the chart, let's say of one instrument, back for, let's say, 3 months. And check what happened. What happened after the breakout? Did the market follow the breakout, or was it a false breakout? And compare it with the MACD. MACD is not repainting. It's always the same. It's not that, because there are many indicators which are repainting themselves. When you look back in the history, it's showing you perfect results. But in the moment when it was absolutely different. Those repainting indicators, this is absolutely scam. I hate those things. And people get caught in it. People buy those indicators, which so nicely look on the charts. But at the moment when you want to make a decision, the values are different. So this is the way my approach to the market is, that if I can test the strategy, and when the assumptions are so simple, I can spend even 4 or 5 weekends for this. And when I see that from 100 patterns, 70% worked, okay, I think that's worth trading the strategy.
And I understand your MACD. So MACD, I think maybe for the audience who are listening, so MACD, there are 2 main approaches to it. One is the lines, the squiggly lines that show up on your charts, like moving average. And the other one is specifically called the MACD histogram. I believe you are focusing more on the MACD histogram. Am I right?
Yeah. Yes. Mm-hmm.
And again, so the MACD histogram, right? So correct me if I'm wrong. It basically measures buying and selling pressure in the market. So the histogram can be either, I think on TradingView, it's the default color is green and red. So if it's red, it means that there is more selling pressure. If it's green, there's more buying pressure. Yeah. So I think maybe to kick things off, now that we've kind of explained to the audience what the MACD indicator is about, how you use it, I think you also have a certain settings, right, for your MACD indicator based on your preference. Maybe you can share the specific settings that you use.
Well, I must say that maybe the settings themselves are not so specific, because those are traditionally it's 12. Because what is MACD? MACD is just showing us the distance between 2 moving averages, exponential moving. One is 12 period and the second one is 26 period. So we can say there's a slow moving average and fast moving average. And the distance between them is this what we see on the histogram. The only problem starts how to use it is that sometimes it's over the zero line, sometimes it's below because an oscillator, it's oscillating around the zero line. And then it's a question, because the original MACD has one color. It means that it's non-stop, just one color, gray or blue or red, doesn't matter. But the one I'm using is double color. It means that anytime it's changing the direction, it's changing the color. Why? Because it's easier for me to analyze the market when I see, my approach to the market is very simple. I open my computer and search for the moments when MACD just started turning around, making a U-turn. And then I look if there was a pattern and so on. So it's easier for me to select an instrument for trading when I look at the colors. It's so simple. A child could even do it. I would say my sons at the moment over 30 years old, so it's not. No, I would ask him. But let's say I would ask my children, who is let's say 6 years. I say, okay, come here, and find me a screen where MACD is first time red, and he can do it for me. It's so simple. And when he says, okay, Grandpa, you can say on Euro USD, the MACD just changed to red on the 4-hour chart. And then I look at the chart, I say, okay, this is one thing, but it's not enough. For me, it's also, I need to see the market making a high of the swing high. I need to have a pattern. There's some more things coming. But the first thing, I don't know if you had the problems also when you started trading, when you open the charts and what to start with? What should I start with? Which market is giving us a chance for a trade? Many times I had that problem when I started trading. Which is the moment? What is the best trade instrument to trade? Now I have no doubts. I just scroll and see red. Oh, here it comes. Today I saw that, as I remember, it was on pound with dollar, that on daily there's something changing. I say, okay, I put it on my watch list. I'll come back to this in the evening and I see how the daily candle will close. If it's closed on bearish, it might be a signal for a correction. Or if I see that market is trending and I see that MACD has fallen below the zero line, maybe it's time to join the trend again. So it's so simple that people don't believe that it works. And still, I mentioned some time ago during our last webinar, which I'm happy that I could share my ideas with your community. And there was a question about the efficiency. I said my efficiency is 84%. So it means that I made 1,000 trades and 840 trades are winners and 160 are losers. And I thought that people don't believe in it, so I will show them today. I'll give them the link to the account so they can check it. It's a live account. It's an account which is 2 years old, and they can do it. They can see it because I know that this strategy is working, but maybe people need some more proofs that it's working.
Nice. And so maybe now we can just maybe dive a little bit deeper and talk about the I think you started off with the MACD and the price action strategy, right? So maybe let's talk about that first. So you mentioned, I think the first thing you look for, it's I think you can go different ways. Right? You look for maybe a MACD histogram, right? Let's say the market is the histogram is now green color. You're looking for a downtick, so meaning from green it becomes red. So what about market structure? Does it matter whether the market is in an uptrend or downtrend, or first thing you look for is just the MACD histogram?
First thing I look at the histogram, but then I analyze the market very closely because the fact that MACD changed the direction for me is only a hint that this might be an interesting instrument. Not all situations. Okay. MACD. First thing is that MACD not in all moments can show us a good. They don't. Not always MACD will indicate properly what's happening because MACD must be extended. It cannot be flat. It must be really high away from the zero line. Second thing, it must be regular for at least a period of time. It cannot be that it's choppy, it's changing red, green. Then I don't believe it. It must be. So it's not that it's not so simple that just MACD green that I sell. No. there must be some other in this in that module I made on your platform. I mentioned that MACD must also fill some rules. It must be, the value must be high enough, and it must be regular for at least a period of time. It cannot be choppy, as I call it. So this is the first thing, but it's not enough for me to trade. It's just a way to select from 35 charts which I have, those most interesting. Okay, so let's say I have 35 charts open at the moment, and I will choose only 3 of them, because on 3 of them we see that U-turn of MACD, and then I go close and look. If I see there's a huge strong trend, I don't want to trade against a strong trend, because corrections, I trade on the corrections, but I prefer to join the trend. So sometimes I say, okay, let the correction run. When the correction will be over, I will join it. I will join the trend. And I of course analyzed high time frames, daily and 4-hour charts, using this price action and MACD strategy. For scalping, I have a different strategy. It's also based on MACD, but then I don't look at all at the patterns. I look only on high lows and swing high, swing low. So, this is what I said at the beginning. Every instrument you need to have an approach to instrument individually. Gold, for example, I love to trade gold, because gold and MACD, those are really best friends, I must say. They are so friendly. They are so nicely correlated that I was showing many times on my webinars that it's something incredible how gold and MACD are working together on daily and 4-hour chart. It's a charm. It's a charm. And if you understand when MACD makes sense and when you should avoid it, the efficiency is 80% of the entries.
Got it. So from what I'm hearing is that you don't just look at the MACD histogram, like, from green become red, you sell, or red become green, you buy.
No,
but rather you want to see there's like a proper ebb and flow to it. You want to see like kind of like there's a peak to the greenness. There's like certain, I don't want to use the word overbought, right? But you can see that the spike in the MACD histogram is pretty much large, right? Large relative to the earlier spikes of the histogram. And that's where from green it becomes red. And that's kind of like your first condition, and then you start to look for other patterns, like you mentioned, the inside bar, the outside bar, the engulfing pattern, etc. So hopefully I got that part correct. And you want to avoid those MACD histogram where it's near the zero line chopping up and down. You typically
definitely
avoid such conditions.
It's not worth then trading.
Okay.
Just what I would add, because it's very important to understand what is an inside bar, what is an outside bar. Inside bar is nothing else but a consolidation. It means that there's a huge day, and then market cannot break the top, the maximum or the minimum of the day. This is the inside bar, okay? And what we say about consolidations, breakout from consolidation is an opportunity to trade. That's why breaking from an inside bar means for me that market decided to move. And what is the direction? Is the direction of the breakout. Of course, we have false breakouts. Trading would be too easy if every breakout would work. And MACD helps me to avoid those false breakouts. Maybe not all of them, but most of the false breakouts, I avoid looking at MACD, because it often happens there's a breakout, but MACD still didn't change anything. No, it's still the same direction as it was. This is an alarm signal for me. Oh, someone is gonna trick me. I'll wait. So that's why I use MACD as a kind of a filter. It's maybe not a decisive thing, but as a filter, I showed many times a situation when I said, okay, guys, now we have an inside bar. MACD is still showing bullishness. Now we wait for the breakout. And if this breakout is followed by bearish MACD, this is the moment we can start selling. But if you see a breakout and MACD is still bullish, forget about it. It means that they are going to trick us. They want to pull higher. It's a strong trend. So naked charts are very good, very good. But naked chart plus MACD is the best.
Awesome to hear that. So let's say we have our MACD. So just walk me through. I'll just walk you through the scenario, and maybe you can share your thought process so the listeners can kind of like, because we're not sharing charts over here, so it helps them better visualize, right, to your trading approach. Yeah. So let's say MACD is having multiple green bars, and then boom, right, we have a red bar, meaning there's some selling pressure lurking in the back end. Then you probably look for patterns, right? Patterns that you're familiar with, like you talk about the inside bar, the engulfing pattern. So let's say you have a bearish engulfing pattern on the chart, right? I guess that meets your second criteria. So what happens next?
Well, if MACD turns to let's say that we are analyzing a bullish market. Okay, there's a bullish swing, and I'm watching at the charts, and I couldn't find MACD. That MACD just turned to bearish. Then I look at the charts if maybe there was a pattern. So those things are equal for me. Either change on the MACD, either a pattern on the charts. And then normally the best setups for me are when I see a pattern. My favorite patterns are outside bars. Those are, in case of a upswing, of course, bearish engulfing pattern. And when I see a bearish engulfing pattern and I see that MACD didn't change, I say, very good situation. I put it on my watch list and wait for the breakout. As long as I don't see a breakout, even MACD will change to bearish. I still suspect that it could be a tricky situation. Let's say three assumptions must be met, all of them, not only two of them, only first and the third or the middle one, all three. If I see breakups from a pattern and the market and MACD is following the breakout, then I feel that it makes sense. Sometimes specific instrument is gold, where I also analyze market on 1 hour charts, because I found that on 1 hour chart gold also likes to feel the assumptions of the strategy. But on other instruments, I use only 4 hour and daily. I don't take into consideration lower time frames because there are so many patterns on the lower time frames. You see, on the 5-minute chart, you can find daily maybe 20 such patterns, which one work, one not work. It's absolutely useless, because I say that in case of patterns, inside and outside bars, not all is gold that glitters. Not each pattern will work. Because people try to find shortcuts. They buy a computer, they open an account with a broker, and they start trading because they already know how to press the buttons, buy, sell, and so on. And then after some time, they find that there's so many things they should learn. Education is absolutely a must. Don't believe that you have a beginner's luck. Okay, it can happen once or twice, but at the end, the education, the knowledge comes. And the knowledge means filtering setups which may not work. Focusing on those best setups. Don't trade each pattern because it will not work. Pattern must be either on let's say bearish engulfing, it must be on a swing high. Bullish engulfing must be on a swing low. If you find a bullish engulfing on a swing high, it means that it will be probably continuation, not a reversal pattern. So I think that practicing is very important. 15 years of trading learned me a lot. I burnt many accounts before I started. I think that I started gaining money after 4 years of trading. For last 7 years, I didn't have a losing year. This is what I believe is a success.
Beautiful.
Sometimes sometimes the wins were not big ones, but generally, I think now it's the 8th year I'm closing with a profit in a row. I have 5 accounts, to say the truth. I have futures account where I don't need a broker then. It's, let's say, but this is absolutely different to the contracts for difference. by the way, what is happening on the contracts for difference comes from the futures market, of course. We need to have the quotation from somewhere. Yeah? It's not taken from the air. But contracts for difference, I have 3 accounts on CDFs and 1 on stock market, on Polish stock market, but this is the most speculated stock market in Europe, I think, Polish stock market. You know, it's so the capitalization is so low that one big customer can change, you know, the quotation. So I keep up to I have some stocks open on the banks, Polish banks, which have huge, much bigger capitalization. So I have some shares from the Polish banks only.
Okay, and maybe just to take a step back and maybe just to continue off from the MACD. So let's say just want to give the readers some guidelines that they can go and research on their own, right? So let's say the MACD, let's say imagine it's a bullish. Let's say there's a bearish engulfing pattern at a swing high. MACD has now from green, right, now becomes red, and then let's say there's you mentioned that there's a breakout of the bearish engulfing pattern. So is there any definition that you call a breakout? Is that maybe, I think if I'm not wrong, it's like a close below the low of the engulfing pattern? Would you call that a breakout?
Yes,
looking at the
of course.
closing price?
Yes, for me, a breakout means breaking the low of the candle, creating the pattern. In case it's an inside bar, it will be the mother bar extremums are important. So if they break, you mentioned a bearish engulfing pattern. For me, a breakout means that the candle closed outside. But what I mean closed, it means the candle must be finished. It cannot be a breakout during the day. If I analyze daily candles, I need to wait to the midnight before I can say that the breakout happened. Because it might be so that last 4 hours they will start pulling higher and they close in the range of the pattern. Then there's no breakout. I would even call it a false breakout, which that in case of false breakout, market likes to move opposite direction with a double speed. So because they catch some customers at the bottom and then whoop, we go. So no, I always said that the market is doing all the best to cheat us, and the market likes to be tricky, and we must be prepared for any situation. So for me, a breakout means candle is closed outside, candle is over, and a new candle is built. Then I can.
Are you referring to the daily time frame?
In case of daily, I need to check this candle in the midnight, after the midnight. In case of 4-hour charts, it's better because we have 6 candles per day, so it can happen. So I must say that I prefer trading on 4-hour charts because it happens quickly. I mustn't wait to the end of the day. I just see, let's say, after the US session is open, I see, okay, candle closed. Close outside, MACD is falling, I can join the market.
Okay, and does it mean that...
Yes.
Does it mean that the pattern this is assuming that the pattern is formed on the 4-hour time frame. Did I get that right?
Once more?
So let's say you are looking for the breakout on the 4-hour time frame. So this is assuming that your candlestick pattern has formed on the 4-hour time frame, not the daily time frame.
It depends. It depends because sometimes we have a pattern on 4-hour chart, and I can trade it. And then I check next day. I see, also the daily created a pattern, because it happens that the pattern is built starting from 1 hour and then it grows.
Right.
No, it grows. So, but if a pattern is built on 4-hour chart, I check on the 4-hour candles. If it's built on daily, I look at the daily. So the definition would be that the breakout must happen from a pattern on the same time frame. So if it's on a daily, then a daily candle. If it happens on 4-hour chart, it must be a 4-hour candle. Some people ask me, I see that this 15-minute candle just broke out. I said, but it's still 45 minutes to close 1 hour, and it's 3 hours and 45 minutes to close the 4-hour, and the pattern is on 4-hour candle chart. So it's not so easy that a 5-minute chart will break out. It's the breakout. No, of course, you can risk. It depends what is your appetite for risk. If you would like a risky trading, you can start trading after they just touched, after they do 3 pips below the pattern. Okay, it's a breakout. But so many times I was trapped in this that after 1 hour they were back in the pattern, and then I was hoping that maybe they will break out at the end, because MACD was still not changing anything. So you can try to trade a breakout on a not finished candle only if MACD confirmed the breakout already. Then okay, then the risk is not a big one that the candle will close again in the range. But I prefer just, some people say that I'm a slow trader, like a snail. I never hurry in trading. I always say there's always another day. There's always another trade can happen. It's so, I say it's like moving with a crowd. If you go one step before the crowd, you can miss the moment when they turn around. You're still going forward at nobody behind me. So the same is with trading. I rather go by the crowd, by the big boys, than try to show them where should they go. So I rather go by the market, not before the market. Even if I lose 20 pips, even if my entry is 20, 30 pips later, then it could be. First thing, safety for me. Safety of the account. We didn't speak, of course, about the money management here, but I think that everything starts from money management. Everything. The best strategy won't save you if you don't properly manage the money, the account. And if I would say, what is the most important number in trading? Because there are so many numbers. The efficiency, the profitability, the sharp ratio or risk to reward. There are many, many numbers in statistics. For me, the most important number is drawdown. I feel if you are able to manage the drawdown, you will never lose. Well, sometimes it can happen, of course, but controlling the drawdown, in my opinion, of course, this is my private opinion. People can have absolutely different, but I'm not looking at the numbers that how much percent I earned today or how much I lost today. For me, it's most important how big was my drawdown today, how much I risked. And I try to not to cross, my maximum drawdown this year is 15%, which happened 1 month only. Normally, I try to keep it below 10% because, letting a drawdown go 15, 20, then forget it. Then it's no sense. You can risk, if you trade with $1,000, you can risk 60%. Okay, $600, I will survive. But if you trade with $100,000, would you risk 600? 60,000? No.
No, of course not. No, for most people, no. Unless I'm a billionaire, maybe.
At least they are just, sorry for saying that, but stupid. So stupid that they risk so many. If someone is able to lose $100,000, it means that he's a millionaire. Okay? But I know people who are not millionaires and they lose so much money because of not keeping the drawdown under control. Drawdown for me
Totally
is
agree.
most important number.
And yeah, so to carry on where we left off, okay, so now we have, got the MACD, we got a pattern, we have the breakdown, right? So I think the next question would be, where would you then going to set your stop loss and your target? Maybe you can expand a little bit more, talking about your stops and your target.
Stop loss and targets in my in my system. Well, in case of stop loss, my stop losses are always based on the patterns which I'm trading. If I'm trading a pattern which is a size up to 100 pips, I put my stop loss over the pattern, about, let's say, 10 pips higher than the pattern. Let's say that I'm trading a upswing, and there's a pattern on the top of the swing, and I want to short it. Then my stop loss is over the pattern about 10 pips, in case the pattern is not bigger than 100 pips. Of course, this is plus minus, it's not a universal number. But if the pattern is huge, let's say on pound with yen, the pattern can have even 200 pips. Then I put my stop loss over the breaking candle. Why? Because if there's a pattern and then comes a candle which begins in the pattern and is closing outside, it means that someone initiated a move, and someone made a decision it's time to break out from the pattern. So in my opinion, it's a logic that putting a stop loss over that breaking candle means that you are over the price from which market initiated the breakout. It's the level where there's a strong selling area. So if I put 10, 15 pips over the breaking candle, it means that if they break it, if they take my stop loss, it means that no more bearishness. Again, they are joining the trend. Because the candles are showing us what's happening. If I see a breaking candle starting inside the pattern and then closing outside, it means that decision was made. Who made the decision? Sellers. Where they made the decision? Where the breaking candle started. This is the way I understand the market. Market is always between buyers and sellers. Who's stronger? And in that moment, sellers were stronger. So if I put my stop loss over the entry price, it means that I put it on a safe area in case they go over my this breaking candle and take my stop loss. It means that it was the best I could do because no more selling. It's time to go with them. So this is where I put my stop loss. Regarding the take profit, it's not there's no universal prescription, let's say, because it depends on many things. One of those is that there was a guy whose name is Bulkowski. Mr. Bulkowski was a man who was making statistics of different patterns. He was testing thousands and thousands of patterns. I read that he tested 3,000 head and shoulders pattern to find how much the market breaks out from a head and shoulders pattern. And he checked that over 70% of the patterns break down, I mean the head and shoulders, and they gain 70% of the size of the pattern. Usually we say, oh, head and shoulders 1-to-1, the size of the pattern, the size of the breakout. Mr. Bulkowski tested 3,000 and said, no, it's only 70% of the size. This is theory. And he also tested breakouts from outside bars, engulfing patterns, bullish engulfing patterns, bearish engulfing patterns. And he said that in case the breakout is at the size of the pattern, he treats this pattern as a good one. It means that it worked. And he tested also a few thousand of those patterns. And he says that that probability that after market breaks out from the pattern and makes a move of the size of the pattern is 72%. So I believe that when I'm trading let's say a sell from a pattern, my target should be at least at the size of the pattern. But this is theory. Sometimes situation doesn't let me to have such a big take profit. It depends, Normally I use the demand and supply zones. If I see that when I start selling and I see that there's a demand zone close to the pattern, my first target is this demand zone. I don't try to take targets below the demand zone because it's nearly obvious that they will stop on the demand zone. Then they make a correction, they come back to the pattern, then they try again. Market doesn't fall just like a stone. It usually wanders a bit up, a bit down. It's moving in a swings. Yeah? So stop losses in my strategy, the definition of a stop loss is either over the pattern if it's only 100 pips or less, but if it's more than 100 pips, let's say 150, 200, then I put my stop loss over the breaking candle in case of a sell order.
Got it, right? That was concise. I love it, right? Very clear. At least I understand. Hopefully those listening in, watching can visualize right where you are coming from. Beautiful. Yeah, so also you mentioned supply and demand. So let's touch a little bit on that one because I think now you actually have given us a very high-level overview plus a detailed explanation of your price action plus MACD trading strategy. So maybe now we can talk a little bit about supply and demand, right? Because I know that you mentioned earlier the OSPS, right? Was it the end of day trading system? OPOS. I love the names you give. OPOS, right? What's the OPOS, right? What's the full acronym for OPOS?
Only pending order strategy.
There we have it, OPOS, right?
Only
the names you give are really
strategy.
interesting. Okay, OPOS, all right. So let's talk a little bit about that, right? So OPOS, I believe, but before we talk about the OPOS, I think that's strategy is very useful for those who have a full-time job, right? Because you don't need to be in front of the screen all day. But before we get to it, maybe let's talk a little bit about, because your take on the difference between support and resistance and supply and demand. I believe you feel that there's a difference between the two. So maybe you can share your take on it.
Yeah, I always say that before because sometimes I make some webinars and people ask me about the support and resistance, supply and demand. And I always say that my approach to support and resistance and supply and demand might be different to this what you already learned, because many people say that support and resistance is the same like supply and demand. They don't see the difference because sometimes it really is in the same place. But to say the truth, it's not the same, at least in my meaning. This is what I understand. I understand support and resistance are levels which are created by the market in a technical way. Sometimes it happens that because of some news, market starts to grow from a place. But when the market comes back to those levels, it mustn't react again because there'll be no more news. Let's say there were payrolls, and payrolls pushed the price from, let's say gold started from 1900 and started growing to 1950. And when price comes back to 1900, it doesn't mean that once again it will go, because there'll be no more payrolls that day. So this is why support and resistance level, I mainly trade those levels, horizontal levels only, and I treat them with a high level of, suspicious. I'm very suspicious on those levels. Supply and demand zones, this is absolutely different story. To make market move, a big move, make a big upswing, you need some forces to do it. Those are buyers, okay? Those are big, I call them big boys, sharks of the market. Those are big banks, hedge funds. Those institutions operate with such huge amount of money that we cannot even imagine. Those are billions and billions, and they are able to change the price on the market. And we should follow the big boys. We cannot fight with them. So if someone started buying gold at 19,000 and is pushing the price higher and higher and higher without any news, just because it started growing, we can be sure that on the level of 19,000 there are more money laying. Why? Because if they would like to buy all the gold they want to buy, they would spoil the market. In short seconds, the gold price would go so high that they couldn't realize the market, the order at once. So they divide the orders to small chunks. Let's say they want to buy 2 tons of gold. Okay, they buy 1 ton at 19,000. They wait for the price to come back, and they buy another 250 kilos or another 250 kilos. This is the way they must divide the orders to chunks, because in other case, putting an order, okay, I want 2 tons of gold, and then the last kilo they will buy at $2,000. That's why, not to disturb the market, they divide it to chunks. And those, I call them block orders, order blocks. And this is the way the market is moving. I'm using a platform, NinjaTrader, and I have some volumes from the real market, from the futures market, and I see those blocks. Of course, this is absolutely different trading. It's nothing compared with this what we see on our MetaTrader platforms or TradingView. But at the end, everything comes to the same. There are some areas of interest where there are buyers, and there are some areas of interest where there are sellers. And I always say that demand zone created by the buyers, if price comes back to that area, the probability that market will bounce back from it, will reflect and again initiate buying, is very high. That's why I believe in those zones. And when I see that such a zone was created, and I saw, for an example, let's say that it was dollar with yen, and price went 150, 200, 300 pips higher from a zone. And when market is slowly coming down to that zone, I can put a pending order over this demand zone, expecting that when they hit it, there will be a once more a reflection. And what's good in this is that I can put a pending order and close my computer and go for holidays. And in case price comes back to that level, they will initiate my trade. So I don't lose an opportunity. That's why pending orders are very good for people who would like to treat trading as a hobby. They have maybe 2 hours per day for trading. They analyze the market. They look where are the supply and demand zones, which could be activated next day. They put a pending order. My idea is that I put my stop loss. If I want to buy on a demand zone, I put my stop loss below the demand zone and put my target at the same distance like my stop loss, 1-to-1. Because the statistics show that if market is coming close to a level, to a zone, it more often bounce back than breaks it through directly. So let's, for an example, I have a level, $19,000, and it is a level which is the level of demand zone. The probability that the zone will be broken straight away is only 30%, 70% chances that it will bounce back. And this is truth. If you look at the levels, mainly the levels are attacked 2-3 times before they are broken. So if you find a level and you say, yeah, this is a strong level because market really created it some days ago, some weeks or some months ago, and there was a huge reflection, next time they'll do it once more. Maybe not the same size, but at least some part. So this is a strategy which is, I call it for working people, because this is just using, the statistics are helping us in this, because statistics say if before breaking there will be at least one reflection. And of course, the reason why this zone was created by big boys, big whales, sharks of the market. They won't let the price just go through and it's all. Especially it's very important to analyze the zones and find the best ones. And it's not so difficult. The best ones are those from which you had the biggest move. When you look at the chart, you can open a daily chart and say, okay, from this moment, let's say Canadian dollar, from this moment to this, they made 800 pips, and then they started falling. In case they come back to that level, this level will work once more at least once. And then you can plan, okay, the supply zone, the demand zone is, let's say, 50 pips. I open it pending order just over the demand zone, and my take profit will be also 50 pips. This depends, of course, on time frames. You can also use it on 15-minute charts, on 1-hour charts. It all depends on how many orders per day or per week you would like to open.
Okay, so from what I'm hearing, it's let's say you talk about supply demand. How it mainly differs from support resistance is that support resistance could be just created from news release, right? Like maybe NFP, CPI, whatsoever, whereas supply and demand is more of institutional orders, right? They wouldn't want to put in like $1 billion to buy gold at once because the gold price will spike. So they will have multiple orders. Maybe instead of $1 billion, is split it up into like 200 million, 200 million, 200 million,
Yes,
something along those lines. Yeah. So then earlier you mentioned that Ninja Trader, you can see the volume profile to kind of like help you better differentiate, right? Which supply demand zones to trade off. But let's say someone who doesn't have that tool or software. So based on the charts, right, what will the key things, right, for them to look out for? I think earlier you briefly mentioned the magnitude of the move, right, to kind of like filter out, which are the zones that are better compared to the rest. So is there anything else to add on top of it? Like how do we differentiate, good zones from bad zones?
Well, of course, the distance on which the market moved from the zone is very important because it shows the strength of the buyer or seller. I made an indicator for this for those zones. I have an indicator which is drawing those zones for me. I found the indicator many years ago. I tried to use it, but it was giving some funny results. And I worked on this indicator with my friend. It took us a few months before we found the best settings, which are based, of course, on candlestick patterns, not on the volume, because connecting it with the volume, it would cost a lot of money, and it would be an indicator which would work for some people not. So this is an indicator based more on technical analysis, but it gives very reliable results. And I must say that just to say it straightly, frankly saying, the best zones are those which are on the top and on the bottom of the chart, just to make it easy, because those zones are oldest and they give us the biggest range between one and second. Because if we have zones very close to each other, I have absolutely different strategy. If I see zones which are, for an example, the distance between those zones is 20 or 30 pips, then I understand that this is a area of a consolidation. And then I trade breakouts from those zones, not reflections, but breakouts. It means that if they are between two zones and price is moving, is trapped, and then once they break out, I put a pending order, but it's a buy stop or buy limit or sell stop. It means that it's going with the flow, not against, because normally when you say the price is falling to a demand zone and I want to buy, I'm trading a bit against the flow. But in case of zones which are close to each other, I put sell stop or buy stop. And then if they break out from that range, usually they travel to another zone, which is in using those zones, it's easier for me to determine where should be my stop loss where should my take profit. Because my take profit will be always on the closest, below the closest zone or over the closest zone if I sell. So we can use this strategy with the flow or against. It depends. There are many factors deciding where I put my pending order, but I think that the best way is to practice. Open a demo account and practice. This indicator is also on your platform. It's available for free, absolutely, in this
Right. And what about
ultimate price action.
Okay. And also, let's say, what about zones where I think you call it order blocks, right? Where the market didn't just come to a zone and immediately take off. Instead, it comes to maybe a level or zone and area or whatsoever. And then it starts to consolidate maybe 6, 8, 10 bars before it makes a move, right? So those looks like I guess, kind of like a consolidation, a mini consolidation on the chart. So what's your take on such a price action that you see on such zones?
So you mean that the price is coming to a zone, it's not breaking and it's not reflecting, it's just moving on the zone in small range, yes? Oh, those are the worst things because I usually feel that if there's no reaction and there's no bounce back, it means that it will be broken.
Okay, got it.
Because it means that there's no more money on that zone which are able to push the price back. It could be a signal that the zone is gonna vanish in close future, because
so you expect
everything is money. If there's no money on the order block, it means that the order block will fail. Yeah?
So would there be instances where, let's say, you already have your order set, your limit orders, your stop loss orders, and then that happens at the zone where it hasn't hit your stop loss yet? Would there be a chance that you'll just prematurely exit the trade, or would you rather let it hit your stop loss and then see what happens next?
It depends. Once more, it depends on the let's say lifestyle of a trader. If he's able to control the trades, even if he's at work, let's say he's working in office and he has a break, he can take a look at the phone and say, wow, there's no reaction on the zone, I'll close it. But there are people who cannot do it. A driver of a car, a bus driver, cannot control his charge during the work, or someone who is working in a factory, he must be focused on his work. He cannot look at the phone. So those people are in a bit worse situation. That's why, in my opinion, each pending order must have a stop loss and must have a take profit. Because if there's only a small reflection, maybe they will just hit your take profit and it's okay. But if they go after some period when you couldn't control it and you see them going through your zone and you haven't your stop loss, you are lost. So in case of pending orders, you need to have a stop loss and take profit. It's absolutely it's a must. It's a must. It's obligatory. You cannot risk opening a pending order without putting a stop loss and take profit, because you never know how the market will behave. That's why, and you shouldn't be too greedy. You should then give your take profits huge levels. It's enough if your take profit is as the size of a zone, then it's okay. Greediness is something which is a big problem within traders. More and more, we want more and more. But even I would say that I have a saying that the biggest reason for that people fail in trading is lack of patience. Lack of patience. This is something which we know, the FOMO, FOMO feeling, fear of missing out. Oh, I must go, I must enter today. It's already, I'm looking at the charts 3 hours and I didn't open a trade. Wow, I must open something. Oh no. I never open if I'm not sure that there's a, checklist. Just make a checklist. This, and this must happen. Then I am opening a trade. And that's all. You are free of confusions. You are free of making emotional decisions. Just take it cold. 1, 2, 3. Pattern, breakout, MACD. This is my strategy. It's like a nearly like a phrase.
Short and sweet, right? Fantastic. And also, I'm hearing a lot about having a one-to-one take profit, since I think you're primarily a swing trader. So are there instances where maybe you don't aim for a one-to-one, maybe you risk $1, and maybe due to price action or whatsoever, you actually take off $1 and you end up getting 70 cents or 80 cents? Are there instances like that where you go for a less than one-to-one?
Yes, of course, because I can afford myself. I have a high probability of winners. As I mentioned, I have even one account where I have 95% winners, but this is a scalping strategy which is only 1 month old, so it's nothing to say. But the older accounts, 2-3 years old accounts, they have probability about 80-85%. So I can afford myself having a lower risk to reward, and I still am profitable. I must say that maybe it's not. Maybe I shouldn't say it loud to people who are just starting trading. But guys, I'm not so much focused on risk to reward. I'm more focused on efficiency, on the probability.
Because there's two sides to the coin. I think one thing that a lot of new traders, which I feel for, they get so caught up with, I must have a minimum of a 1 to 2 risk to reward, 1 to 3 risk to reward. So this way I have a 50%, 40% winning rate. I'll still be profitable. But on the other side of the equation, if a trader who's like you have 80-85% winning rate, you don't need a 1-to-1 risk to reward to make money. You can even go to $1 and you make back 80 cents, right? Or even 70 cents. I think in the long run, you'll still be profitable. So there's two sides to the coin, right? Which I really feel, right, that, all traders should understand your risk to reward and your winning rate. They're both kind of like two sides of the same coin. You must find the right balance, right? Yeah.
Yeah, there are two ways, either risk to reward, either efficiency, and I choose the efficiency, especially that when I'm scalping, I absolutely don't look at the risk to reward. I just want to close a profitable trade, and that's when I see that things are going against me, I'm just closing without thinking about. But generally, the account which I one of the accounts is public, so people can check it, can see it. It's a moderate account. It's an account with an amount of money which is maybe an average capital. It's not something huge. It's not something very small. It's just an average, and that's why I'm showing it, because I believe that this is a level of which is available for traders who want to be professional traders. At least start from this such an amount. And when I looked at my risk to reward ratio, generally from 1,000 trades, it's 1.5. It means that for $1 which I risk, I have $1.5 return. I have some trades where there's 1 to 40 on a profit. I risked $1 and got 40. So, but there are also some trades where I risked $1 and I got only 20 cents. That's so I'm not so much focused on risk to reward. I had a session for my Polish friends on Tuesday, and I said there was a question: wow, you risked 100 pips and you closed 25 on there. Ha ha ha. I said, okay, but I closed 25 on a profit. If I wouldn't close it on 25, I would be losing 25 2 hours later. Huh? So what is better, keeping to the risk reward or just taking the money from the table? So no, I don't stick to the risk reward so much, especially that I have different volumes. I sometimes open the half a lot. Sometimes I open 0.1 lot. So I should. It's not so easy to say 1 to 1 or 1 to 2. Sometimes I earn $20, and sometimes I earn $5. So how can we compare it with risk reward? It makes no sense for me.
And oh yeah, by the way, Dargo, the time now is about 1.5 hours, and as mentioned earlier, I like to just do a check. How are you feeling? Do you still want to carry on with a few more questions, or you prefer to just kind of close it up, right? And we can talk another time.
No
What's your
problem.
take on this?
No problem.
Okay, so maybe I'll just ask you a few more questions then, right? Then before we sum up today's session. So yeah, I think earlier you talked about news, right? You say you're primarily 70% a technical trader, but you're still aware of fundamental news that's going on around the world. So what's your take, of the news, right, when you're trading? How do you approach the news?
Well, every day before I trade, generally Sunday evening or Monday morning, I make analysis of the whole week, 5 days, and I check for the most important events which can happen this week. Because, for an example, if I see that on Thursday the Bank of England will make a interest rate decision, or that they will make, because Thursdays I call them super Thursdays for Bank of England, because Bank of England always has few things at once happening on Thursdays. And let's say that there'll be an interest rate decision, and half an hour before we have the CPI report from Great Britain. I know that trading pound this week is risky. So if I plan to trade on pound, I don't do it on Wednesdays, day before the main events. I scalp. When I'm scalping, it's not a problem. When I'm scalping, the news make no. Absolutely, I'm not not looking at the news. But mainly, I'm a swing trader. So if I plan to open a position on pound, I need to know that there's nothing which can disturb this technical analysis. Because technical analysis, you can throw it to the trash bin after the news very often. I hate having a webinar just before the news. People asking, okay, what's your position on Euro USD? And I say, well, I can say you many things today. I can say you wonderful things. I can take you a star from the sky. But let's wait to the ECB meeting. Then we can speak about it realistic. Because all what I say today, tomorrow after the ECB decision, you can throw it to the trash bin. This is why I look at the calendar, economic calendar, and I try to avoid trading pairs where there could be some interesting events, some volatile events. For an example, last Friday, I was trading euro with Canadian dollar. I was shorting it. And I showed why. I was showed that there's an engulfing pattern, there's a breakout MACD turn to bearish. It's a good opportunity. I put it on the Telegram channel. Probably you saw it. And I said, I'm shorting it. But then I looked at the calendar. I said, whoa, Canadian Bank of Canada will make a decision or something. No, it was retail sales from Canada on the US market opening. And I said, guys, if the data are positive, Canadian dollar will get stronger. This will be something which will be on my favor. But if the retail sales are bad, I'll close my trade as quickly as possible. And luckily, the Canadian retail sales were good, and I got 70 pips on a profit that day. But why shouldn't it could have happened absolutely in a different way? I could have closed minus 70 because they would go against me. So technical analysis is okay if there are no very important events. But if there are very important events, we need to take this in consideration. But if it would be so easy that if, let's say, inflation up, dollar down, inflation down, dollar up. It's not always that way. Sometimes market likes to surprise us, and there's so irrational market reaction that we just have such eyes. What's going on? Inflation went down and dollar went down. Why? That's why it's better not to avoid trading before the news. We never know what they plan to do. So, but of course, I mean the news which are marked with red, which are I'm using the calendar from my FX book. There's a very nice, clear calendar, and then I see what's going on very quickly because they mark with red all those important things. But sometimes, even payrolls sometimes might not cause any volatility. If let's say if in the same week we have on Wednesday Fed decision about interest rates, and 2 days later we have payrolls. Those payrolls have no impact that day because all the decisions were made by Fed on Wednesday. Next Fed meeting is 6 weeks later, and the payrolls from Friday make absolutely no sense because they already knew the data. I don't believe that Fed doesn't know what's happening with payrolls if they are deciding about the monetary policy. We, retail sales, the traders will know it on Friday, but they already knew it on Wednesday. So then I know, okay, the payrolls won't be an important event, so we can just mustn't take it into consideration when we are trading something.
Got it. Nice. I like how you actually shared that you pay attention to news, right? More of a risk management perspective, right? To know when to exit a position, to know when to stay out of the market so you don't get caught, right, from the news release. Curious, the next thing I'd like to hear from you is that, you've been trading for so many years, definitely longer than me. And I'd like to hear what are some of the biggest challenges that you had to overcome, right? And what do you learn from it?
Well, the challenges. I think that the biggest challenge is we ourselves. We ourselves. The biggest opponent in trading, it's me. It's me. It means that we have to overcome the weakness, such as greed, ignorance, weak will, and of course, above everything, the most important thing is, of course, sticking to the rules of the strategy. And you know how difficult it's to be consistent. It's how difficult it's to keep, everything in hand, the emotions. And we see something which looks very interesting. Oh, I think that the market just moved because there is some data. Market is moving. Let's trade it. But then you must cool down and say, whoa, but there's still MACD is giving me no hint, and there's no breakout. There's no pattern. Why should I trade it? Let's cool down. Be patient. Emotional trading is something which gave me the most losses ever. I had a big loss in 2015, and I will remember it to the end of my life because it was not only a huge loss, but it was also a loss because of my stupid entry. If I would look at this market in a cool way, I would never open a trade on it. And I was so focused on this that everyone is buying, I'll buy also. And I bought it on the top, absolutely top of the chart. And I only saw, my account vanishing in after 3 or 4 days, I lost everything. So from that moment on, everything changed in my trading. I must say that it was 2015 which absolutely changed my approach to the market. I said, okay, main thing, save your capital. Don't let the market take more than 15% of the account at once. This is absolutely maximum on all trades. But one trade cannot lose more than 5%. And I started sticking to that rule. Everything changed. But I think the biggest obstacle is ourselves, our strong idea, a weak will, that we are not keeping to the rules. We are not keeping to, today in the morning, you say yourself, okay, from today, I will never let my trade go below, let's say, 2%. And in the evening, we check, wow, -5, -5. Your will is not working. Because, people have, there are some people talented. They have some special character for trading. Those people make business. The people earn money on the markets, but this is a small percent. Maybe 2% of the traders are just because they have this character of a warrior. But most of us are normal people, and we need to train your character. I remember my beginnings. This absolutely. When I look at how I started, I really am surprised that I'm still a trader. because normally, and this is something really crazy. When I look how I was trading, I was looking at account after account after account, 3 years, just spending money, all free money for losing and losing. And after 3 years, I should quit the work at all. But then came someone who helped me. Someone gave me a hand, said, "Wow, what are you doing, guy? Do you know what's the outside bar? Do you know what's the inside bar?" I said, "Well, those are simple things. Those are just basic things. I know all about them." Yes? Okay, so what you would do with this one? Well, I would trade it. Are you sure this is a good, step by step? I had a mentor who helped me for 6 months and everything changed. Absolutely. And then I started profiting. And this was a kind of, line in the sand. But I think that what I could advise the people who start trading, or experienced, those traders who are just beginning, or maybe even they feel their experience, but they're still losing. First thing, keep an eye on the drawdown. Absolutely the most important number. Don't look how much you earn. Look how much you lose. This is first thing. And another thing, which I believe is also a big problem. People believe in those things which they see in the internet. They see hundreds of percent people gaining hundreds and thousands of dollars in one day, getting rich in seconds. People believe that if you earn 5% a month, you are useless. You are, what a trader, 5%. I made 5% only on one trade. Yeah, the question is how long. So, Mr. Warren Buffett, the most known trader, investor, the famous investor, in the most famous. He has this company, Berkshire Hathaway fund. He earns about 24% a year from 1964 starting. 1964 until now, every year, this average income is 24% per year. And he's known as the best investor ever. So how can you be better than Mr. Warren Buffett and you say, okay, I'll earn 100% per month? So it's very important to have realistic targets. Don't believe that you will be a millionaire in 1 week or 1 month. It's really a long way. It's climbing step by step, losing sometimes on the way, but don't be in a hurry to become a millionaire. It won't work at all. It won't work. Because, people who want to make fast money usually quickly lose both capital and enthusiasm. And that's the end of the story.
I'm curious, earlier you mentioned that there's a mentor who helped you for 6 months. So does your mentor trade in a similar manner as you?
Well, it was a person who was absolutely technical analyst. He wasn't absolutely interested in fundamentals, nothing, only technical analysis. And it was a good approach to the market in 19. It was, let's say, he started showing me those things in 2012, 2013, when those things work. But now I found that fundamental analysis also is important, especially in those difficult times. The coronavirus, the pandemic changed a lot. Inflation came here. Then now it's very important. I believe that the news are important. That's why I combine. He was only a technical analyst. Unluckily, he had a heart stroke and he died a few years ago. So he was an old guy. When I contacted him, he was 70 years old and he was already, cooling down. He was not a full-time trader. He just treated it as a hobby, and he had a lot of free time. It was part of our family, I would say, even, but a far family. It's a person, collegated in many generations back, and he was mainly stock trader. But when he found out Forex, and he heard from me that I'm losing the 12th account in a row, he said, "Okay, show me what you are doing." And he just, "Oh my goodness, what are you doing?" So he changed my attitude to the market. And now when I try to help some traders, I have the same attitude as he had. Slowly, basics, simple things, not complicated. he learned me that indicators are helpful, but if you have too many indicators, it's a problem, because he said, okay, you have 10 indicators on your chart. You believe that it will help you. So put 10 people before yourself and ask them a question. And what will you do if 3 of them will say yes, 3 of them will say no, and 4 of them will say, we don't know? Is it a help for you to make a decision? Or you ask them, what kind of shirt should I put on when I'm going to a wedding? And you'll have different opinions. You get lost. Isn't it better just to take 2 people, and one will say this one and this one? So he also, he used some samples from life, and he transferred it to trading many times. Very simple, samples, very simple answers. And then I learned what means an objective strategy. What is a discretionary strategy and what is objective strategy? Because discretionary strategy is based on your feelings, on your you encourage yourself because, I'm a genius, I will know the best. This is the discretionary. You make the decisions because you believe in this what you know. And objective strategy is you just believe in facts. This is what happens really. That's why I hate strategies where you should decide about entering on your feelings, not on the facts. This is the difference.
Right. And I just want to backtrack a little bit because I think I might have missed out this few questions earlier. So earlier when you're talking about the OPOS trading strategy, where pretty much the strategy for people who are working full-time, trading off supply-demand zones, right? So you mentioned, you can use limit orders, right? And you mentioned your target is usually about 1-to-1. So I'm not sure if I asked you this earlier. So what about the stop loss? So where usually do you set your stop loss? Let's say you're looking to buy off a demand zone, where would your limit order be and where would your stop loss be?
Well, if I plan to buy on a demand zone and I saw that this demand zone gave before a huge move, which is a signal that some buyers are there, the demand is huge on that zone, I put my entry few pips over the zone, because if I base on an indicator, I must always take into consideration that indicator is a mechanism. It's an algorithm. Sometimes it can vary a bit. It won't give me 100% level, but I must say that many times they just touch it and bounce back. So the indicator is really perfect. I must say that I tried some other indicators which absolutely have no value compared to this one. And so I usually put 5 pips over the zone entry, and my stop loss is 2-3 pips below the zone. This is the way I put it. And if the zone is, let's say, 20 pips, then my stop loss is about 25, 27 pips, 30 pips maybe. And this is usually the target I would like to have. But each situation is a bit different. There's no universal prescription, because if you look at the context and you see on the left, the history, that there was a spike up from some level, I believe that it became a resistance now. So I will put my take profit below that spike, below the spike started, because so I would say this way: stop losses are easier for me to put the stop loss than the take profit here.
Because take profit, you still have to consider the price structure on the market. Where's the swing high? Where's the resistance, etc. And then you kind of
maybe
adjust accordingly.
Maybe there's a support and resistance over somewhere, which could be an obstacle on the growth.
Okay. So let's close it up with a few questions, right? Because you've been so patient and kind with us, and I really like the way you educate traders. There's a lot of sense of calm, experience, wisdom, and it's not very rushed. I know, do A, B, C, D, X, Y, Z. No, why you do this? So it's very calm, and yeah, there's a demeanor, right, that I sense from you when you explain, concepts and strategies. Yeah. So let's say some just closing questions for fun, right? So what are you most excited about right now, whether is it professionally or personally?
Personally, I'm preparing to the World Championships in swimming, which will be in Doha, in Qatar, in March. This is my target at the moment, my personal target. because I checked my results from winter and I see that I can have a chance for a final. So this is my target, personal target. So I'm training hardly 3 times per week. I plan to change it to 4 times a week. And in case of professional things, with something to do with trading, I would like to close the year on 100% profit. So I'm at the moment
Nice.
40. I'm at the moment 90. As I remember, 96, 97% on one account. On other accounts, I'm about 85%. So those maybe I'll not manage to put up to 100%. But my plan is just to do what I'm doing until now. I don't want to, the numbers to make some pressure on me. But I'm very close to close the account on 100% in December. So this is my, let's say, target for in business. And what more? I'm taking part in your program, and which is something new for me. I like it very much, and I hope that I will have more. I can take more time, spend more time on helping the traders with some ideas. So generally, I like new things. I just finished a cooperation with one company after 2 years contract. And I'm happy that we started some cooperation here. Maybe it's something not big, but I see that there are some traders who like this, my entries, my analysis. It's always fine to see something new, especially that now I contact with people with the second part of the world, far away from Europe. The contract I had for the last 2 years, it was with people from Europe, mainly from Poland. So I'm always open on any kind of cooperation when I can see the effects. When I see someone writes back, "Oh, I started gaining now after so many years of losing," it's always a big, big reward for me to hear something like this.
I'm happy to hear that. And maybe I was curious. I was about to ask you earlier about the swimming. So you are aiming for the next competition in March in Qatar, and 3-4 times a week training. Do you have a coach, or is it you're just on your own? Following the process.
I must say that my coach is this one here. This is my coach. This is my coach,
The timer. Okay.
the timer. Yeah, I have programs here, training programs, which I write down for 3 months ahead, and I'm just following those things. This is a Garmin watch, which I have an entry, so I can check every interval I swim. I check the times. I check the pulse, the pressure, everything. So I go to the doctor each 3 months to control myself. What is the blood? How many red cells I have? Everything. Like a profi, like I did it when I was a profi swimmer. Now I'm just repeating this thing because in my age it's very important to control those things like pressure, like pulse, like the blood consistency. So you cannot do it just because you like it, because even for people who are 40 years old, they also need to control themselves. We are not programmed to live forever, I would say this way. So, and really, swimming is a kind of I would say escape from trading, because if you trade too much, it doesn't give good results. I know that you need to find the balance between fun, sports, and work. Even if I'm not going to a swimming pool, I'm riding a bike. I make per year about 3,000 kilometers on my bike, but I bike only in the forests, not on the roads, because it's not so nice to go on the road. I'm rather biking on the forests, some fields. So I would say it's a more cross biking than on the streets. So those together gives me, when I come back from a training, from a workout, I have fresh mind. I have fresh view on the markets. And this is what I saw in the morning. After I come back from the swimming pool, I say, oh, now I have a more clear situation. And in my opinion, the first thing is you need to be patient. If you didn't enter a trade because you were too late, don't try to chase, the running train. Wait for them. There will be another opportunity. There are so many instruments. If you forgot or you didn't manage to open a trade on Euro USD, maybe there'll be an opportunity on gold or maybe on pound. Don't be in a hurry. Don't try to enter everything you see. Then emotional trading is the worst thing we can have.
I'm seeing a lot of parallels, right, between competitive swimming and trading. It's a lot about the process, right? Like, you have your routine set up for the next few months. You're just following the process, right? And whatever outcome happens, I believe you will, handle it. Whether you win or you didn't win, right? Your mindset is really geared towards just becoming better each and every day, right, of your life, right? Whether you're trading or swimming. Yeah. Is there anything else, right, that you would like to add, or any questions that you wish that I asked you that I didn't have a chance to ask you earlier?
Well, I think that we spoke about very, very various different things. What I would say, a kind of what I could give an advice if I'm the proper person to give advice. I don't know, but for sure, guys, when you are trading, remember about drawdown. Believe me, if you keep the drawdown under control, everything will go well. Don't let your trades be losing for dozens of percent. I don't say that there's a rule, 2% a day or 1% a day, 1% on a trade. No, you need to have rules which fit your character. If you like adrenaline, if you like emotions, let it be 5%. Okay, but then keep up to this 5%. It doesn't mean that if you allow yourself to lose 5%, you will lose also 10 and say, okay, it's only 5% more. No. If you have rules, stick to them. If you stick to the rules, you will win.
Awesome. And where can the audience, find and connect with you if they want to, connect with you? I believe you're on Facebook, right? You want to share, what's your handle on Facebook?
Yeah, I have a Facebook, of course, but because I'm two language person, so I have a Facebook in Polish, but I also have a group, a trading group on Facebook. It's called Trading Price Action Patterns. So you will find it, and there's about 40,000 people at the moment on this group. But no, let's say that active people are less. Maybe 1,000 of these are people active, and I promote the trading price action patterns. So no expert advisors, no hundreds of indicators, only price action
Just the MACD.
and amazing.
MACD.
Yes. Yes.
Awesome. Thank you so much, Dargo. It's been a great pleasure speaking with you. I love it, right? So thank you once again for your time. Thank you for, going through, right, sharing your trading methodology, right, breaking down your price action plus a MACD trading strategy, plus the OPOS trading strategy for those who are working full-time, plus, right, your competitive swimming, the top process, and many valuable, I would say, life lessons that can be applied to trading as well. I think you shared that, quite a bit in today's conversation as well. So I appreciate you for that. Thank you, Dargo.
Thank you. I'm very happy that I could have this interview with you, or this podcast even. And I hope that people will like it, like we like together to speak together. Thank you.
Thank you, Dargo.